Hello friends, welcome. Friends, today we are going to do a very interesting analysis. Now friends, in front of your screen, you will notice that there are two different dashboards. One on your left, another on your right. Okay. Now on your left, it is RBI's monetary survey in rupees lakh crores, except percentage. What does it mean? Let me explain step by step. This is giving a snapshot of the total currency in the system in terms of M1, M2 and M3 money. And let me explain what this M1, M2 and M3 money is all about. Now M1 is a means of identifying a certain class of money which becomes illiquid as it goes from M1 to M3. Means the M3 is the most illiquid money in the system. And what is the most liquid form of money? It is M1. Why it is more liquid? This is why it is. Now, if you look at this particular dashboard, you will notice that the first row is the currency with public. What is currency with public? It is the hard cash which you hold in your hand in physical form. That is the currency with public. Then we have another line item called demand deposit. Demand deposit is the currency or the notes that you or the cash that you have in your bank account, which you can withdraw anytime with no string attached. Now, and then we have other deposit with RBI. So these three, if you add, this becomes M1, right? So if you add currency with public, demand deposit and the other deposit with RBI, it will become M1 because these are the most liquid form of currency that you have. So suppose, let's say if you have to do a transaction, you don't have to attach any string. You don't have to worry about whether you have to, the liquidity of this currency is so high that you can spend the money at your own will without any string attached. So that is the most liquid form of money called M1. Then there comes short-term time deposit. The short-term time deposit are fixed deposit in your bank account which you cannot withdraw. So, but these fixed deposit are of a duration of less than 1 year. So these are less liquid. Now this plus, which is the M1 money plus the short-term deposit, if you add it becomes M2 money, right? So that is the definition of M2 money. So M2 money is the M1 money plus short-term deposits. Then we have long-term deposit and call term money of financial institutions. So if you add to M2 long-term deposit, which are fixed deposit more than 1 year, and then the call term funding from financial institution, it becomes M3. So now you probably have understood that there are three classes of money, and these classes of money are useful from the point of view of various types of economic transaction in the system. And depending upon a particular class of money, you actually have a certain flexibility to do those economic transactions. Now friends, what I've done is, in this sheet, I have captured the absolute value, which is in rupees lakh crores in a time scale, which you can choose here from week, month, quarter and year. So this is the dashboard which I typically make. And then I am measuring this value of these currencies on the nominal GDP, percentage of nominal GDP. So like on a yearly basis, if you notice that the currency with public at the time of FY12 was 11.7% of the nominal GDP. Now it is 12.01%, right? Similarly, in demand deposit also, you can see how it is changing over a period of time. So you can choose a weekly time scale, you can choose a monthly time scale, and then you can choose a quarterly time scale, right? So this is about the description of the sheet. Now let's go to the other side of the screen, which is RBI daily settlement data of payment system, right? This is also in rupees lakh crore. So what it is basically designating, so there is a settlement data. So I'll show you where it is. You can go in the RBI's website. Here is the RBI's website. I'm just going to bring this front of your screen. Just a minute. Give me a minute. I'll just. So this is the settlement data. So if you click here, you will be able to get the data. So it will basically come out and you can download this data, right? So this is on a daily basis. The RBI has settlement data. So what I have done is I have captured this data. Here in this sheet, right? So it will give you on a time scale basis the how much amount of electronic transaction is happening on a particular time scale, right? Let's say if I do a daily time scale, you will see that how many RTGS transactions are happening, how many UPI transactions are happening. So these are all total sum of transaction on the granularity of a day, right? And on a month, the number of transactions gets added up and you can see the numbers. For example, if you see the UPI transaction in November 22 was 11.9 lakh crores. Now December 23 it is 18.2 lakh crores. Now in the month of January for 5 days it is 3.4 lakh crores. But one important trend that you see here is that the number of transactions have been increasing over a period of time, and that is very easily visible by doing an yearly time scale. Look at this. The total amount of transaction in FY21 was 1,292 lakh crores. Now it is 3,835 lakh crores. Now in UPI it was 37.3 lakh crores. Now it is 146.9 lakh crores. So what it tells, that the economy is becoming more cashless, means more electronic transactions happening, people are using less cash. That is what is coming out from this data. However, when you look at the RBI's monetary survey, I get a very different kind of experience or a different kind of output is coming out from this. Conclusion that we are able to draw is quite different from what we are seeing on this particular part of the screen, which is from the settlement data, and it is clearly visible here. Let me tell you why I am saying this. On an absolute term, the currency with the public, which is the hard cash, which should be as less as possible, because more the currency, more the electronic transaction happens in the system, people should need less cash, right, on their pocket, because they are having other means of doing transactions. They are following all kind of e-banking, UPI, which has become so prevalent. So the currency, the need for hard currency should be decreased, right? That is what the natural conclusion should be, right? Giving this particular data that we are seeing. However, it gives quite a different kind of conclusion which we can draw from this particular table, is that look at this data. FY24 Q4, I'm doing a quarter basis. Let me do a yearly basis first, and then we'll zoom in. On a yearly basis, FY12, we had a transaction of we had a total cash holding of 10.3 lakh crores, right? Then it increased to 11.4 lakh crores, then 12.5 lakh crores, then 13.9 lakh crores, then 15.9 lakh crores. These are all cash, hard cash holding with the public at any point of time, right? Because this currency with public. Look at this row. This is the dimension that we are looking at. Then at the time when the demonetization happened, suddenly it fell from 15.9 lakh crores to 12 lakh crores, and then it increased sharply. Now it is at 32.7 lakh crores. The total cash holding in the system is 32.7 lakh crores, because we will be focusing only on this line item, because rest of the line items are all electronic, held in the bank. So it does not make any sense, because this is the cash transaction, this particular line. So we are focusing only on this, right? So after demonetization, there has been a sharp increase. Look at this sharp increase in the total cash holding in the system. Now, people may say, oh, our GDP has increased, therefore the cash has increased. So let's do a GDP, nominal GDP, percentage to nominal GDP. So I have that dimension also here captured. Now look at this. In FY12, it was 11.77% of the total nominal GDP. Then it is 11.46% in FY13. Then 11.12%. Up to FY16, before the demonetization happened, the number fluctuated between 11.77 to 11.52. Means within roughly around 11.5 to 11.7, something within that range, between 11. Then it's quite natural that at the time of demonetization, the amount of cash in the system got reduced to 7.8% of the total nominal GDP, which is the current GDP. Then slowly the number rose. FY18, the number became 10.23%, then 10.85%, then 11.61%, then 13.9%, then in 12.91, FY22, it became 12.91%. Now, one can understand that the percentage rose in FY20 because there was a drop in GDP because of COVID. Understood? No problems with that. But the situation has stabilized now. In FY22, it is 12.91%. So why there is an increase in the total cash in the system by 1%, roughly around 1% or more? Why? That is the question one needs to ask, right? And then there is a sudden drop in the cash in the system. I'll tell you why. Because of the 2000 rupees note, notification which RBI came out with. And this is the notification I'm going to show you. See the total amount of cash in the system. Just a minute. Let me just bring this in front of you. So this is the notification that is in front of you. What it says that the total value of 2000 rupees banknotes in circulation was 3.56 lakh crore at the close of business if 19th May 2023, and a withdrawal of banknotes was announced and has declined to 9,330 crores. So from May 2023, the number has gone down from 3.56 lakh crores to 9.330 crores, means 9,330 crores. Okay. So that is clearly visible from this table also. If you look at this table, and if I do a monthly time scale, you will see that in March, so it was in May. So there has been a slight, from March 23, the number was declining, right? And then in May, the number was so much, and then it basically went down, and the demand deposit actually kept on increasing. It's very clear from that. So we can understand that because of the COVID, the nominal GDP decreased, and therefore it showed up at a higher number. Understood? But now, the system with withdrawal of 2000 rupees note from the system to an amount of around 4 lakh crores, still this number is 12.01%, which is higher than the number that we saw, in spite of the fact that our system has become more cashless. We are doing UPI transaction. So I really don't understand what is going on in the system. Can you make any sense out of this? Why the total amount of cash in the system should increase in spite of the fact that we are doing so much electronic transaction? Our system is becoming more electronic in nature, and with the withdrawal of 2000 rupees note from the system. So you please, I really want to answer. I could not understand the answer to this question. Therefore, I thought of doing this video with a hope that people will introspect and come out with some kind of answers which they can put in the comment section, and we can learn from the other people's experience what is going on, why the total cash in the system is increasing in spite of the fact that we are doing more electronic transaction, and a lot of cash has been sucked out of the system. The high domination notes have been sucked out of the system. So let me know in the comment section what do you think. So I thought of doing this video just because I found this very interesting, and let me know. And as usual, thanks for your patient listening, and I'll come back to you the next time with another topic of discussion. Thank you very much.